Hey, good morning, people. It's Tuesday, February the 13th, the day before Valentine's Day here. Let's take a look at the markets and see what's going on. Just real quick, I had noticed something, so I want to present this idea because I'm about to hop in myself. So we'll take a look here at the S&P 500 just real quick. We noticed and we talked about yesterday, bouncing into this 382 area of resistance, and this being a point that we wanted to start thinking about thinning out some of our long holdings, and we also are looking for this 618 retracement up here at 2743. Today's action so far in the market is pretty much sitting at a neutral. I think it was down about 0.2% at last check. So we're just kind of standing here at the moment. I don't really see anything until the inflation data comes out here in a little bit. It's going to move us, so that might cause a reaction. Like I said, we're in one of two modes here. We can either look for a pullback back to the 200-day and then possibly a rally higher, or we could probably consider that might sit here for a second, and if we get a catalyst, then we'll start looking to extend up here to this area before I think we fall back down ultimately. You can play it either way you want to there. It's kind of what kind of conviction you have, and if you take a look at, say, a shorter term chart like a 120, we talked a little bit about yesterday. We were looking for this swing high right here to be taken out before we have some kind of proof that we should be buying, because as it is right now, we just have a series of lower highs all the way down through here and lower lows. So that's a bearish picture overall. I know we did talk about, we had the moving average crossover, and we were talking about, well, you could say one of these counts as taking out a swing high, and that would only be the case, and I said that was fine, you could justify that, but that's only if you're looking at a shorter term time frame. So you need to consider the time frame, like I say, whenever you're making your trade. You can't take data off a 15-minute chart to justify buying an hour trade. So that's kind of how you need to think about that. We got the crossover. We did take out the high and took out this one, so all these highs are a little bit more visible on lower time frame charts. But now we have had a bearish crossover, and we did take out that little low, and this low right here looks vulnerable. I hate that word. So that's kind of where we're sitting at right now. It kind of looks like we want to kind of do this little number until, like I said, we get the data, and then if it's bad or if it's perceived as a negative interpretation, I think we go back down here to 200-day, and if it is considered neutral to bullish or okay data, I think we kind of rally a little bit. But like I say, we're not looking for a return to the highs. We're just looking for a return back up to that 2743 area, which is right in here. And then at that point, we would be expecting a dip back to the lower side. Okay, the one thing that I wanted to say real quick, and I'll be back here in a little bit with a little bit more detailed update, was taking a look at shares of GE. I said yesterday I think you can start looking to buy this one, so I'm still standing beside that. And if you recall, I said yesterday also that we had a strong move to the upside after putting in these lows here. We hit that one. We dipped a little bit lower, but ultimately we ended up holding. We had good volume coming into play, and we have our moving average crossover here. We took out our swing high here. We've taken out this high. So I think that this picture is pretty favorable right now. I did say though that I expected us to move up to this level here, and then we would probably pull back down to the 618 before we could continue up higher. So now we're at that 618. So this is the buying opportunity that I was mentioning there, especially for a little bit shorter term trade, is right here, and that's exactly what we were looking for, was the 618. So that was at 1460 some odd, 1459 or so. So pretty much call it 1460. So we've got our shot here. I'm actually going to buy some in the money calls, probably looking out to March or even June for expiration. The June ones will include the next earnings report. The March ones are a little bit cheaper, but when you're in the money, they tend to be about the same price because they have no time value, or they have no time value. They're pretty much all intrinsic. So I can buy the March ones for, say, $4.70, and the June ones are $4.80. So I can double my expiration time for only another dime. So that's not a bad setup or anything. So I think you can look to buy shares of GE, or do it via playing some in the money calls or some You know, if you want to look at some out of the money calls for a little bit further out, I think you got a good opportunity here. But this is a short-term trade, so we're looking to play it in a short-term way. And I don't want to put a lot of capital on the line because so far GE has not been very friendly to shareholder capital, especially when you take a little bit longer time frame. So again, I'm okay with it right here, and that's actually what I'm about to do myself. And I will go ahead and start walking through this trade with you as we get this video wrapping up here and stuff. Oh, another thing I wanted to mention just real quick. We talked about a little bit about volatility yesterday. Today the volatility is still staying fairly modest. We're up about 3% right now. That's not bad considering the 60-70% moves we've been seeing out of this thing. So you know, we've kind of started to have this little base. Whoops, let's switch over here a little bit. We kind of started having this little base of support building right through here. And I kind of think that that's one of those things that, like I say, this is an index, so it's not really like people are actually buying the VIX or anything. But you know, if this data ends up being bad here in a little bit, this thing could blast back up here to the 40s or 30s, or it can move seriously quickly if the data is interpreted in certain ways. So I will probably exit my VIX puts just because I don't want to ride through that wind with them. Even though I think it actually might turn out to be a favorable thing for my trade setup there. Okay, actually I'll be back here in just a little bit. I wanted to give y'all a little update there and go ahead and hop into GE. Like I say, just be nimble and kind of be careful that it, and so we're already starting to see an uptick here now. And if we look intraday, right there we're starting to get our, and this is on a 3-minute chart, so I've kind of tried to start venturing away from the 1 minutes just because they're a little bit too fast or too volatile, and especially for what we're doing. So this is a 3-minute chart. Notice we got right here, we have our moving average crossover. We took out the high, we pulled back a little bit, and now we're starting to look to go higher. So I think this is where you hop in and you start expecting a pull or a play to the upside. Oh, there's my timer. Okay, so I start thinking you start looking for a play to the upside, where that level that we're playing to the upside is. I'll put the work together here in just a little bit and we'll take a look at that. But I think that you're, in any event, you're safe to be buying right here and right now. Okay, I'll be back in a little bit, guys. Take care.